This guy right here, he's famous for predicting the 2007 to 2008 housing market crash. And what is his name?
Yeah, Dr. Mike Burry.
He's not your regular market analyst. When this guy makes a prediction, he puts his money where his mouth is. When he predicted the 2007-2008 housing market crash, this guy didn't just say it. This guy is a man of action, all right? He aggressively shorted the housing market, hence the name of the movie The Big Short, in which he's portrayed by Christian Bale. So I know the geniuses among you guys will probably be like, man, that was 2007, 2008. Man, what has he done recently? Well, recently he predicted Tesla's big fall back in February, where Tesla went from a little bit over $800 to a little bit over $500. That's about $300 difference, right? And guess who was there with his private investment firm named Silent Capital with a Big Short to take advantage of this? Michael Burry. So why am I talking about this guy today? He posted this tweet recently and we are going to dig into this tweet. But before doing that, let's roll that beautiful intro. It's time to ascend.
Bible, basic instructions before leaving Earth.
In his tweet, he says, people always ask me what's going on in the markets. It is simple. Greatest speculative bubble of all times in all things by 2 orders of magnitude. Hashtag FlyingPigs360. He goes by the name Cassandra on Twitter, which is a little bit weird. But Cassandra was a Trojan priestess of Apollo in Greek mythology who was cursed to speak true prophecies, but then to be never be believed. I guess this is how Mr. Burry feels. So we've heard the man, but is there any truth in what he's saying? From my point of view, Mr. Burry is right on the money because the Feds printed more money in 1 month than in 2 centuries combined. From March 2020 of last year to today, the Fed's money supply has more than 4x. We have gone from $4 trillion in money supply to $19 trillion. Most of that new money has ended up in the stock market, the real estate market, the cryptocurrency markets, and different other small markets. And this has fueled a very giant speculative bubble in all things. And this is what Michael Burry is referring to. As someone who loves charts and technical analysis, what are the charts saying? So at the moment, we are looking at the weekly chart for the S&P 500 index, and we can see that the S&P 500 has been trading in this ascending wedge since the COVID crash. So since the COVID crash, we've been trading this ascending wedge, and we've touched the resistance line. We've touched it twice, and we've touched the support line. We've touched it about 4 times. Let me throw in the mean reversion channel so we can see the grand scheme of things using mathematics and statistics. Right, so at the moment we can see that the mean is currently sitting at 3,392, and then the price is currently sitting at 4,352, right? And then so price is currently 1 and close to the second is close to the second standard deviation above the mean, and this is a clear indication that we are way overbought and way overextended, right? This is confirmed in the mean reversion channel, and it is also confirmed in the RSI. And also confirmed in the MACD. The MACD has not returned back to the 0 level since when? Last year. I have my eyes set on this target date, November 22nd. November 22nd, I believe we will have a strong confirmation on whether the market will continue this bullish run over here or it will revert back to the mean, right? If I was going to put numbers to it, I would say there's a 40% chance we break outside of this ascending wedge and continue this bullish run. And there's a 60% probability that we will break below this ascending wedge and revert back to the mean. In case the 60% probability does happen, meaning that the market starts turning around and we are reverting back to the mean, I believe we'll have a 20 to 30% pullback. And then that 20 to 30% pullback, it will happen very short. It will happen within a month. So if we start the pullback from the end of November, then by the end of December, maybe after the holidays, after the 25th of December, we should have our recovery starting after that. So does that mean we should start being fearful, stop investing, and take all our money out? Nah, we're not pussy. We'll keep investing. We will keep buying. You know, let me stop before I get myself in trouble. I'm not a financial advisor and I can't give you guys financial advice. But then for me, I'll keep buying. I'll keep investing. The stock market is a roller coaster ride. For me, all I do is I sit in that roller coaster ride and I have fun with it. I'll end the video over here. If you've not yet liked, if you've not yet subscribed, come on, man. Just give me a like at least, all right? Just give me a like. Matter of fact, why don't you just do both? Give me the like, give me the subscribe. Let's get the channel to 50 subscribers. Thank you guys in advance. See you guys in the next video. Bow.